Good morning, it's Brian Egger for BreakingCall.com. It is May 21st. So the shares of Carnival, ticker CCL, are down 8 to 9% pre-market this morning after the company last evening lowered earnings guidance on a 2 to 3 point reduction in full-year revenue yield growth guidance. And the cited reasons for the lower guidance were cruise pricing pressures, voyage cancellations, and higher G&A costs. And Royal Caribbean, the symbol is RCL, is down moderately in sympathy with Carnival this morning. So we have two observations. Firstly, in view of the lower trajectory of expected revenue yield and earnings growth, the sell-off in Carnival this morning is understandable. Cruise pricing has remained aggressive since the Carnival Triumph debacle, and that lower cruise pricing has stimulated bookings, but it's done so at the expense of revenue yields. Secondly, the more muted sell-off in RCL also appears to make sense. Royal Caribbean reported its own earnings and updated guidance back on April 25th, when it did seem to observe some stabilization of demand from Europe. So the question is whether or not industry demand conditions deteriorated further during the month of May. So I'll now turn it over to my colleague Mike Andre, who will discuss the technicals for CCL and RCL.
Thanks, Brian. We will now look at the technicals in the cruise line stocks Carnival, symbol CCL, and Royal Caribbean, RCL. These stocks often trade in similar patterns, and technically they have been trading up since correction lows in 2012. Although the stocks are both under modest pressure after hours, the uptrends are still valid unless more serious technical damage occurs over the next few weeks. Looking first at the weekly chart of CCL, the stock corrected to trendline support earlier this year and has bounced above the 10-week moving average. A consolidation has been underway for a few weeks with very little downside. Important support to watch in CCL is at the trend line in the $33.50 to $34 area. The trend remains up above that support, and the stock gets the benefit of the doubt above the April low near $32.65. The major resistance target in CCL is about $40. Switching to RCL weekly, this stock is more extended from trendline support and had rallied up to prior high resistance near $38.56. The after hours decline looks quite modest, and the stock is still within range of a breakout attempt. The rising 10-week moving average is near $35, with the next support near $33. It may not come back that far, but above that support level, a breakout attempt remains in play. Closes above the $38.56 level would set up a possible run up to the $45 to $47 area, with some minor resistance in between near $41. Thanks for watching, and visit us often at BreakingCall.com.